Dividend stocks may offer more long term stability and predictable cash flow, but if you want to see your money possibly double or triple in a short amount of time, then maybe growth stocks are for you. What is a growth stock? A growth stock is a company that is anticipated to grow at a rate that is significantly above the average for the market. They usually don't pay dividends as they want to reinvest all their earnings back into the company to make the company grow more quickly. This can be tough for investors as now the only way to benefit from the company is to hope the stock price appreciates, which is not always the case. Growth stocks tend to have some unique products, such as a patent or technologies that give them an edge over their competitors. Their profits go straight toward more research and development or gaining more market share. Growth stocks tend to be the newer companies that just IPO'd or don't have a large market cap, but this isn't always a requirement. Investors may not be too concerned about how much money the company is making now, but more so on their future growth and earnings. Here are 5 great growth stocks I wouldn't mind investing in 2019 and beyond. This is just a quick overview of them and not an in-depth analysis. Once I get them into your mind, it's always up to you to do your own due diligence and research them to see if they are the right investment for you. The first stock we'll be talking about is Salesforce, ticker symbol CRM. Now, Salesforce develops cloud-based computing systems. It also offers clients an ability to store data, monitor leads and progress, forecast opportunities, and gain insights through analytics and relationship intelligence, as well as deliver quotes, contracts, and invoices. Salesforce recently announced its acquisition of the company Click Software, which offers automated mobile workforce management. Look at this chart showing revenues nearly quadruple since 2013. This is clearly a type of business that we were going to need more of in the technologically driven world in the 2020s decade. This company needs no introduction at all, and that's because it is Amazon. You guys already know what Amazon does. It's an online retail store that sells electronics such as e-readers, Fire TVs, and it also has Amazon Prime, which allows one to stream TV shows and movies. Amazon continues to expand its business when it bought Whole Foods for $13.4 billion in 2017 and the pharmaceutical company PillPack last year. This is a company that is the epitome of using funds to further acquire businesses and grow in market share in different sectors. For a company that barely made any money on paper just 7 years ago, it made over $10 billion in 2018. From A to Z, Amazon might just one day own the entire world in just a couple of years. What may possibly be a little bit less frightening than Jeff Bezos' plan for world domination is Activision Blizzard, who are one of the world's largest game makers. Their franchises include Call of Duty, World of Warcraft, and Overwatch series, among others. Despite having a record year in revenue last year, the stock is down 35%, right now meaning that it could be a buying the dip opportunity. This is a company that is set up to continue to perform well as the next generation of consoles will be released, and Microsoft and Sony will need video game developers to make fun games for the ever-growing amount of kids and adults who play them. Over the past 20 years, Activision Blizzard has returned 3,820%. This annihilates the S&P 500 return of 123% over the same time period. That outperformance stems from an amazing track record of consistently making high-quality games that have attracted over 300 million monthly active users to date. Our next company helps you open up PDFs. Adobe is a software company that allows individuals and businesses the tools to create, publish, promote, and monetize their digital content. Almost every freelancer and online marketer uses Adobe in some way. Its Photoshop software is super popular in making elaborate designs. When one buys an Adobe subscription, they get access to many of their services, which makes month-to-month cash flow more predictable as users pay monthly premiums. Plus, how are Instagram influencers going to have any followers if they can't Photoshop all their pics? Over the last 9 quarters, Adobe has consistently reported revenue growth greater than 20%. Over the last 12 months, Adobe has generated more than $4 billion in free cash flow. Adobe does carry $4.1 billion in long term debt, but its total assets are double its total liabilities. And just look at how much its profits have grown this past decade. We're definitely going to be seeing a lot of Adobe in the 2020s decade. Before I reveal the last growth stock, if you are enjoying this video, please consider subscribing and liking this video. It really helps small-time YouTubers like me with the YouTube algorithm and motivates me to make more videos for you guys. Advanced Micro Devices, better known as AMD. As we all know, growth stocks start with the letter A, as they did in this video. Just kidding, but AMD is a semiconductor company producing microprocessors and integrated graphics processing units, among other items. AMD is in a key race with rival gigantic chipmaker Intel for market share. It seems like every quarter that passes by, AMD continues to chip in to Intel's business. This is thanks to the Ryzen line of central processing units and EPYC data centers that have made them a legitimate competitor of Intel's. The company's Radeon GPUs also now rival that of NVIDIA in that particular market. It was only a few years ago that AMD served mostly lower cost options for PC manufacturers. Now it's one of the hot commodities with its innovation. AMD stock also recently soared when it announced that Google and Twitter were going to be customers of its data centers for the future. I like AMD heading into the 2020s decade as well. It's poised for a lot of growth and a lot of new innovation. So those are the 5 growth stocks I like for the future. Let me know if you agree with me or disagree with me in the comments. I respond to all the comments and take feedback very seriously on this channel to keep delivering high quality content. Also, be sure to check out these memes.